Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like ADINOC or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETHE Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. Today we're embarking on a deep dive into the really dynamic landscape of cryptocurrency, blockchain tech, and also artificial intelligence.
Right.
Our goal here is to cut through all the noise, pull out the most crucial insights from our sources, and, give you a real shortcut to being properly informed on some of the most impactful stuff happening right now.
Exactly.
We'll navigate through recent market shifts, unpack a pretty significant legal verdict that has broad implications for digital privacy, explore how traditional finance is getting deeper into crypto.
Increasingly so, yeah.
And even spotlight some, frankly, groundbreaking AI innovations coming out of the Middle East. It's a lot to cover, but we're here to make sense of it all for you.
Exactly. We're sort of piecing together what might seem like unrelated news items to really reveal the underlying trends and, well, the future implications.
Yeah.
It's about understanding not just the what, but the why and, the so what for the bigger picture.
Okay, let's kick things off then. Look at the global cryptocurrency market as of August 7th, 2025. So, Bitcoin's price, it's been relatively stable. But what's particularly noteworthy, I think, is this positive shift in ETF inflows. After that period of significant outflows, we've seen about, $41.3 million flow into Bitcoin ETFs just in the last day?
Yeah, and a key takeaway here is that, well, look, $41.3 million is still considerably lower than the average daily inflows we've seen, the $200, $400 million range.
Right, much lower than average.
It clearly signals a positive turn in investor sentiment. On a macro level, the global crypto market is marginally up, about 1.54% over 24 hours, hitting $3.83 trillion.
Wow.
Though it's worth noting, maybe the volume of stablecoins has slightly decreased, which, as one observer pointed out, ideally would be maybe 20% higher for that coveted weekend price pump.
Ah, right. Always looking for that pump. So diving into some of the underlying numbers. The global crypto market's 24-hour trading volume stands at $125 billion.
Huge number.
Within that, decentralized exchanges, DEXs, account for $11.67 billion. And the accumulated fees from all these transactions, quite significant, reaching $81.67 billion.
Yeah, and that staggering figure for fees, it just underscores the immense value being captured within these decentralized ecosystems, right?
Definitely.
It signals a robust, active user base willing to pay for these on-chain services, which in turn fuels further development and liquidity. This raises an interesting question, though. What about the total value lock, the TVL, in DeFi? Today, it's at $138.45 billion. Now, this is a considerable drop from that $240 billion peak we saw back in 2020.
Big drop, yeah.
However, some experts suggest that if the narrative around these treasury firms picks up pace, this number could drastically improve, potentially crossing maybe even $400 billion mark.
Okay, hold on. Could you elaborate a bit on what these treasury firms are in this context and how their activity might drive such a big increase in TVL?
Sure. So these treasury firms typically refer to the foundations or the main development teams behind major cryptos like, say, Ethereum, Binance, Solana, even Dogecoin.
Gotcha, the core teams.
Exactly. They often hold significant chunks of their own native tokens in their treasuries. So when these entities become more active in DeFi, perhaps by staking their holdings to secure the networks or lending them out for yield or just participating more in governance protocols, it injects massive capital and, crucially, confidence.
Right.
Those assets then become locked into DeFi protocols, and that directly boosts the total value locked figure.
Okay, that makes sense. So it's about the confidence and the capital injection from the core projects themselves. Shifting gears slightly to market dominance. Bitcoin currently holds 60.80%, Ethereum 11.80%.
It's still the big two.
Their 24-hour trading volumes, $54.49 billion for Bitcoin, $25.80 billion for Ethereum. Market caps are huge, $2.28 trillion and $442 billion, respectively. And Uniswap is still the top DEX by volume, followed by PancakeSwap, Fluid, Radium, and Iridium. For stablecoins, TETHERUSD leads with $85.34 billion. It's clear these decentralized avenues are, well, they're becoming increasingly robust.
Absolutely. And connecting this to the sort of broader technological shifts, it's worth highlighting the top AI and big data tokens by market cap.
Oh, interesting.
Yeah, ByteDance leads with $3.28 billion.
Yeah.
It's often described as like the Ethereum in the world of artificial intelligence because it focuses on these decentralized machine learning markets.
Okay.
Then you have Near Protocol, ICPO, Internet Computer Protocol, Render, which enables decentralized GPU rendering for AI stuff, and Astory rounding out the top five. It really shows this growing convergence, blockchain and AI.
Yeah, that's fascinating. Okay, looking at current prices then. Bitcoin is at $114,733, up 0.8% in 24 hours, though down about 2.8% in the last week.
Bit of a dip over the week.
Ethereum is at $3,672, up 2.2% in 24 hours, but down over 4% over 7 days. Ripple XRP is just under $3 at $2.99. And historically, August and September haven't been particularly strong months for crypto, have they? The bull market typically seems to gain momentum from October to December.
That's the historical pattern, yeah.
And of course, as always, this isn't financial advice. Please remember to do your own research.
Crucial.
Speaking of market dynamics, though, how do external forces, like, say, geopolitics, play into all of this? We've seen news like President Donald Trump announcing roughly 25% tariffs on India.
Right. Due to their tariffs and purchases from Russia.
Yeah. How does that ripple through?
Well, that's a crucial point. While they seem disparate, the broader global economic political landscape, it's just increasingly intertwined with the day-to-day movements of digital assets. Tariffs like that create political tension. They can indirectly influence Bitcoin and crypto prices just by shifting global trade flows or, investor risk appetite. And sort of on a longer-term view, David Marcus, CEO of Lightspark, former PayPal president, he recently stated, generations to come will wish they were born when they still had the chance to own one full Bitcoin.
Wow, strong statement.
It really is. And that perspective from an OG in the space, it truly underscores this enduring belief in Bitcoin's potential, despite its, notoriously dynamic price movements.
Definitely food for thought there. Okay, next, let's turn our attention to a pivotal legal development, one with significant implications. Roman Storm, a developer of the crypto mixer Tornado Cash, He's been found guilty on one charge.
Yeah, conspiracy to operate an unlicensed money-transmitting business.
Right.
And a critical context here is that back in 2022, the U.S. Treasury, under the Biden administration, they sanctioned Tornado Cash, which is, a crypto mixer designed to enhance transaction privacy. This current verdict is actually quite nuanced. The jury couldn't reach a verdict on the money laundering and sanctions violations charges.
Oh, okay. So what does that mean?
It means the U.S. Department of Justice could potentially retry those unresolved charges in a separate trial. Maybe even under a future administration, it leaves that door open.
Right. The trial was held in Manhattan Federal Court, and some legal experts in the crypto space are already warning this case sets a troubling precedent for DeFi and open source developers.
It does.
Because it seems to broadly interpret money transmitter laws to apply to decentralized protocols. That feels like a significant challenge to the sort of privacy-preserving nature of some crypto tools.
Indeed. And what makes this even more intriguing, I think, is that back in January 2025, the U.S. Treasury, this time under the Trump administration, actually removed all sanctions against Tornado Cash.
They removed them?
They did, implying the developers had done nothing wrong. However, there was a critical caveat. The case could reoccur. And Roman Storm's legal team, they notably decided to fight back against what they saw as wrongdoings by the Biden administration, rather than perhaps accepting what seemed like an offer for his freedom.
So he chose to fight it?
He did. Which makes this a major test, really, for privacy rights within the industry, especially given that previous overturning of the sanctions.
Okay, wow. Quite the legal saga unfolding there. Now, this next development is particularly noteworthy for the world of institutional investment. Parataxis Holdings, a Bitcoin-focused asset manager, mainly for institutions, they're planning to go public via a SPAC merger.
Merging with Silverbox Corp 4.
Exactly.
And what stands out here is just the sheer scale of their ambition. This deal aims to raise, $640 million?
Yeah, $640 million to fund Bitcoin treasury strategies in the U.S. and South Korea. And it includes a pretty substantial $31 million immediate Bitcoin purchase.
Right. And the merged company, Parataxis Holdings Incorporated, ticker PRTX, will be listed on the New York Stock Exchange. They're aiming to leverage a first-mover advantage in South Korea through acquiring BridgeBather. And the platform itself wants to deliver yield-enhanced Bitcoin exposure.
Okay, so for those maybe unfamiliar, a SPAC, special purpose acquisition company, is basically a shell company formed to raise capital through an IPO, right?
Right, with the sole purpose of acquiring an existing private company, letting it go public without the traditional, often lengthy IPO process.
So while this Parataxis move seems positive for Bitcoin adoption on a, macro level, it does raise an important question about SPACs in general. What are the potential red flags, maybe, for individual investors?
That's a fair question.
We've seen SPACs sometimes involve celebrities, right, to sell their products, and then sometimes the original founders might disappear, causing share values to plummet.
Yeah, that has happened. Look, it's crucial for you, the listener, to do your own due diligence here. Be wary, especially when celebrity endorsements are heavily featured. It's not always a sign of a solid long-term investment.
Good caution.
But stepping back to the broader institutional trend, another significant piece of news. The Michigan State Pension Fund has cautiously increased its exposure to Bitcoin. They've tripled their investment in the ARKB investment Bitcoin ETF.
Tripled it. From a state pension fund.
Tripled it, yeah. This directly signals growing institutional investment in crypto through regulated financial products. It shows increasing comfort with digital assets among these traditionally conservative financial entities.
Okay, give us some numbers on that.
Sure. With this increased investment, Michigan State's pension fund will hold 300,000 shares. That's up from 110,000 last year. The investment's now valued at about $1.3 million.
Okay.
And they also hold approximately 460,000 shares of the Grayscale Ethereum ETF, valued at $9.6 million.
So they're in both Bitcoin and Ethereum ETFs.
They are. And the broader significance here is pretty clear. When pension funds, which are inherently risk-averse, right, when they get involved in ETFs, it directly impacts institutional investor confidence. Their participation often becomes a key metric for market legitimacy, and subsequently it can influence the price of Bitcoin and other cryptocurrencies. It's like a stamp of approval from a very conservative part of the financial world.
Yeah, definitely a signal worth watching. Okay, now let's explore a new development in the world of stablecoins. It appears MetaMask and Stripe are reportedly launching a new dollar stablecoin called mmUSD.
Right. This information, according to the source, came from a leaked data point that was apparently quickly deleted. So you get with a grain of salt, maybe.
Okay, interesting leak.
But what's particularly insightful here, if it's true, is that this mmUSD stablecoin is intended as a core asset right across MetaMask services.
Integrated, yeah.
And Strike's deep involvement, the source indicates, is significantly influenced by the passing of the Genius Act. Now, this act, for instance, it clarifies how stablecoins are regulated as payment instruments. It reduces that regulatory uncertainty that previously held back some major players.
Ah, so the regulation helped pave the way.
Exactly. It makes it safer, or perceived as safer, for big fintechs like Stripe to jump in. And we're already seeing major firms like PayPal and Robinhood venturing into stablecoins, so this isn't happening in a vacuum.
Right. The current market cap of stablecoins alone is around $260 billion, and some are speculating it could reach, what, $2–3 trillion within a decade?
It's a huge potential market.
So what does this mean for mmUSD's potential, then? It sounds like it's built with Web3 and decentralized protocols really firmly in mind, designed to be deeply embedded within the MetaMask ecosystem. And given that MetaMask is one of the most widely used non-custodial wallets out there, there's a strong possibility, I guess, for mmUSD to become the default stablecoin for on-chain activity across different dApps.
Potentially. And its seamless integration with gas payments, for example, could offer a significantly better user experience compared to its competitors in that specific context.
But this raises an important question, right? Can mmUSD truly compete with the established players like PayPal's PYUSD or Circle's USDC?
That's the multi-trillion-dollar question, potentially.
Yeah.
Look, PayPal and Circle USDC have robust regulatory and financial infrastructures already in place. They have strong institutional backing, a wider adoption base currently. Circle, for instance, publishes this incredibly comprehensive audit report, over 150 pages long, providing immense transparency.
That builds trust.
It does. These advantages make them more appealing in compliance-heavy environments and also for off-chain users. So while mmUSD might disrupt them in the pure Web3 world over time, the broader market competition is, well, it's undeniably fierce.
Definitely. Now, what's truly fascinating, though, is an idea that seems to be bubbling up. The emergence of an algorithmically backed stablecoin run entirely by AI.
Ah, the AI stablecoin concept.
Yeah, we're talking about AI managing everything, the burning mechanism, the audits, reserves, the overall management. With future iterations of AI models like Groq V4 coming up, is there a real possibility for something like this?
Look, it's highly speculative right now, but the potential is there. Conceptually, an advanced AI could potentially manage the complex variables involved in maintaining a stable peg far more efficiently and perhaps transparently than current mechanisms. But the technical and regulatory hurdles are immense. It's definitely one to watch, though. A very high possibility for such a sophisticated AI-driven financial instrument to emerge eventually.
Okay, fascinating stuff. Now, let's pivot to some exciting news from Dubai, UAE, and the wider Middle East, a region that's rapidly becoming a real hotbed of technological innovation. First up, Nomura-backed Laser Digital has secured a regulatory license for crypto derivatives in Dubai.
Yeah, and a key takeaway here is that this license was issued under Dubai's Virtual Asset Regulatory Authority, or VA, pilot framework. This marks it as the first regulated license for over-the-counter OTC crypto options under VAA.
OTC options, explain that quickly.
Sure. OTC means direct, customized trades between two parties, bypassing a public exchange. It allows for greater flexibility in terms of contract size, expiry, strike price, that sort of thing, often preferred by institutions.
Got it.
So Laser Digital is now authorized to offer these direct client-facing OTC crypto derivatives, executed under ISDA agreements for legal standardization.
ISDA agreements, why is that important?
Mentioning ISDA agreements is key because ISDA, the International Swaps and Derivatives Association, provides these standardized legal frameworks. It brings a familiar level of institutional trust and risk management, things institutions are comfortable with, to these burgeoning crypto markets.
Makes sense. And their initial focus?
Major crypto tokens initially, with future plans including yield enhancement services, borrowing and lending, and spot trading integrations as well.
Okay, so this development really highlights Dubai's emergence as a crypto derivatives hub, doesn't it?
Yeah.
We've seen other major players like Coinbase planning to establish a presence there via Deribit too.
Absolutely. And the chief product officer for Laser Digital noted that Dubai's VARA is both strict and supportive, demanding detailed operational plans before approval, but then offering flexibility for innovation within their regulatory sandbox.
A balanced approach, it sounds like.
Seems so. And in the grand scheme of things, Dubai is just increasingly viewed as this crypto-friendly jurisdiction with significant regulatory clarity. This move aligns with the global momentum towards regulated crypto derivatives and is clearly a first step in Laser Digital's broader strategy to expand digital asset services, cementing Dubai's role.
Really putting themselves on the map. Okay, next, another brilliant piece of news, this time in the world of artificial intelligence. Groq, spelled with a Q, not Elon Musk's Groq.
Right. Important distinction.
Yes, a US-based AI inference platform, along with HUMAIN, which is backed by Saudi Arabia's public investment fund, they've launched new open-source models with real-time access.
Yeah, and what truly stands out here is that these models, GPOSS 12B and GPTOSS 20B, are globally available in what they call Groq Cloud, with real-time inference capabilities. They're focusing on ultra-low latency and high-speed performance.
Okay, AI inference platform, just quickly, what's that?
Simply put, it's where the trained AI models actually run, where they make predictions or generate content based on new data you feed them. It's basically putting the AI to work in real time rather than just training it.
Got it.
And HUMAIN is providing regional support for developers in Saudi Arabia, offering features like these massive 128,000 token context windows, ideal for really long conversations or complex data analysis, and integrated tools including server-side code execution and web search functionality.
And the speeds sound impressive.
They do. GPTSS 12B delivering over 500 tokens per second, and GPTSS 20B hitting 1,000 tokens per second for lighter tasks. Very fast inference.
And Groq Cloud runs across data centers in North America, Europe, and the Middle East?
Correct. Ensuring broad global access with minimal latency. This partnership clearly supports Saudi Arabia's ambitions in AI leadership, intellectual property development, and digital infrastructure.
Yeah, it's been quite notable, hasn't it? How much news related to AI has been coming out of the Kingdom of Saudi Arabia in just the last 3 years or so. Seems like a concerted effort to become a regional AI powerhouse.
Definitely seems that way. A major strategic push.
Wow. Okay, that was a truly comprehensive deep dive, covering a lot of ground in the dynamic world of crypto, blockchain, and AI. We've seen everything from, subtle market shifts and these groundbreaking legal decisions to innovative institutional plays and this emerging regional tech leadership.
Indeed. And these insights, they really underscore just how quickly this digital landscape is evolving, driven by both technological innovation and these critical regulatory and geopolitical factors we talked about.
Yeah.
The ability to synthesize these diverse threads, to connect the dots, is absolutely key to truly understanding the landscape, I think.
So wrapping up, what does all of this mean for you, our listener? Given this increasing intertwining of geopolitics, traditional finance, and technology like crypto and AI, how might these seemingly disparate developments collectively reshape our understanding of privacy, investment, and even global power dynamics in the coming years?
It's a huge question.
It is. It's a lot to mull over, and we definitely encourage you to keep exploring.